It's recording.
We're good to go. I do not know what's happening. Well, anyway, good morning. We are glad that you have come and joined us this morning. This kind of is the end of our newly elected sessions today with you guys. Today we're going to be talking about claims and receipting, and Lori's going to take over here in just a second. I just kind of wanted to go through a few housekeeping items as we get started. So again, we're recording. We did have some technical difficulties there, but all recordings up to this week are available on the website if you would like to view them again, if you missed one, or if you just want to go back and review it. We are going to be after this week, or well, actually after next week, we're going to be working on putting together the certifications. So anytime you logged in to one of these sessions and were present, I get basically like an attendance list. So we'll use that to determine which ones you were there for. We'll have certifications sent to you that show the trainings that you attended. Okay, so I don't know how long that's going to take, but we will get started on it after next week. So kind of, give it a little while, okay? But you'll be emailed those as they come in. We also are going to be putting together a survey. That will probably go out at the end of next week. That survey is going to be really short, anonymous. So anything that you put in there, we're not going to know who said it. But we want you to be as completely honest and open about these sessions, what you found valuable, what you didn't, what could have been better, those kinds of things. Please keep in mind that, obviously we had to do it this way this year because of COVID. But if it really did work for you, or you really did like this, or you have ideas, please include all of that in the survey. We do use these surveys to move forward when we are creating new trainings in the future. So with that all being said, I think that's all I have. So I'm going to turn it over to Lori, and she's going to talk to you guys about claims and receipting.
Can I share over top of yours? Oh, there we go. Okay.
Looky there. It always asks me like 3 questions before it lets me get rid of that.
What is all this stuff? Okay. I need to flip it?
No, you need to present it.
Start it. Now
Yep,
do I need
start
to
it.
flip it? Oops. Oh, okay.
Yep.
Share.
Now you need to swap it.
I need to move boxes. Move you out of
I don't see any boxes. Oh, now I do.
Okay. Whoops.
You're good to go.
Are we good to go? Okay.
You're good to go.
Got all these warning notices. I hope I'm not breaking anything. Okay, so this session is on receipting and dispersing. I gave this same session to the treasurers, so you're really getting the same presentation both sides because both offices work together for receipting and dispersing. So your understanding of it, really you need to understand both sides of it, both offices together. We talked a little bit in a previous session when we talked about working together, how the auditor and treasurer perform the fiscal functions of the county. The auditor maintains the funds ledger, which is the official financial record for the county funds. The treasurer then is the custodian of the cash and investments of the county. All money coming into the county, which are your receipts, your revenues, must be accounted for by both offices, and all money leaving the county funds, which is your disbursements, must also be accounted for by both offices. Since each office keeps their own funds ledger, the reconciliation of the 2 records allows for the detection and correction of errors, and that's why we really, really push the reconciliation. The receipting and dispersing from counties is not a streamlined process. We understand that. This is not the easiest way to get a claim, to get an invoice paid or to pull and record a receipt. But the additional steps involved help ensure that the safeguard of the county assets, of the money in the treasury, the accuracy of the reporting and of the financial records. Okay, and again, it's really just the flip side of the presentation I gave to the treasurers. So again, we held the session called Working Together earlier this month. That session is still on the website. It was recorded. You can view that again, either look at the PowerPoint or actually do the whole recording. Some of the concepts discussed in that session are reiterated here, but our focus now is going to be on receiving and dispersing rather than the reconciling. Not that reconciling isn't important, because it is. In that session, we discussed that the accounting process itself has steps for both receiving and dispersing. You have an authorization step, custody, record keeping, and reconciliation step. The two offices were designed to implement a segregation of duties between maintaining the official records and the custody of the treasurer. So the auditor authorizes the receiving and dispersing processes, as well as maintains the official records or the funds ledger. The treasurer then has custody of the money in the treasury. Nothing comes into that treasury or leaves that treasury without going through the treasurer. They are an integral part of this. The treasurer also reconciles that treasury as it's carried on their cash book to the bank and investments each month. The cash book holds not only the county funds, which is on your funds ledger, but they also hold the property taxes and other sources of excise tax, special assessments, et cetera, that have been collected that are being held in the treasury prior to settlement, prior to disbursement. And so that bank reconcilement is very, very important. But one component of that is your funds ledger, which is why your funds ledger and the treasurer's need to match. I have listed the statutes that govern the auditors and the treasurer's duties for receiving and dispersing, and they were in that working together, so you go back and read them. So the auditor actually issues the quietus. That's the official receipt that shows how the payment will be posted. The auditor also issues the warrants. As we discussed in that earlier session, a warrant is not a check. When we're talking about warrants in reference to the statute, you need to keep that in your mind. A warrant is an order upon the treasurer to pay from the treasury a specified amount to the payee. This may be paid by check or electronic payment, wire transfer, etc. Often, the warrant and check have merged into be using interchangeably. That's okay, but just remember that they are different terms, especially when you're reading the statute. This statute, IC 362912, saying the auditor issues the warrant, does not mean that the auditor writes the check. Okay, it takes both the auditor and the treasurer to issue the check, and the treasurer has to be on that check. Okay, and we'll talk about that in a little bit. The treasurer takes custody of all of the collections to be deposited in the county treasury. Until the treasurer has taken custody of the collections, they are not part of the county treasury. We will discuss this a little bit later when we're discussing the proceeding process, but until the treasurer accepts the money and issues a treasurer's receipt, the money is not part of the county treasury. It's still public funds when it's being held by other county offices, but it's not part of the county treasury at that point. The treasurer would also pay the warrants issued by the auditor if there's sufficient money in the treasury to make the payment. So that's when you're either going to do a check or a money order or EFT or something. When we started the discussions on the receiving process a few years ago, which to us was basically going back to the basics, we created a firestorm of pushback from both the auditors and treasurers, and really with all of the offices, the clerks and the recorders and everyone else that did collections. And you may still find some of those issues in your county. We would not be surprised if you're having questions about any of this or about how your county does it. Just reach out to us and we'll be glad to brainstorm or work through those. What we determined, or what we're guessing, is that with the use of software, it appears that a lot of the segregation of duties that have been designed into the manual process have been eroded. Not the same in every county, but the lines between the auditors and treasurers' duties were blurred in some of the counties. This was especially problematic with departmental collections within the counties, and we'll be discussing those next. In trying to work through that there continued to be misunderstanding. Okay, so we're going to talk about a little bit more, but when we realized there were some issues and we said, okay, we're going to go back to the basics, we're going to start with square one. This is how you receipt. Okay. There was some misunderstanding there too. There was a lot of anger, a lot of frustration that we were changing the process because it's not the way the counties were doing this. One of those misunderstandings was that we said, which we did not, that the auditor would never touch money. That is not correct. Okay, I want to clear that up right now. The auditor should not take custody. You can touch it if you want to, but you should not take custody of the collections from the departments or any other payments directly into the Treasury. However, there are fees that are collected by the auditor. You collect copy fees, endorsement fees, sales disclosure fees, the recording fees for tax deeds, for example. Those are fees by statute collected by the auditor that you post to your fee book as an auditor and then pay into the Treasury by the receipting process we're going to talk about, just as if you were you are a collection point at that, just like the health department or the park department or the sheriff's department. The auditor has certain fees they collect and then turn those in through that receipting process. So there are times when you are collecting fees and you're issuing a receipt for that. So what we're going to focus on are the departmental collections. Most payments by your citizens, other than the property tax payments, are paid to various departments. So your health, your park, your recorder, your clerk, your sheriff, your building departments, all of them are collection points for the county. And they collect those and then turn those over into the county treasury by following this receipting process. And that's really what we're focusing on. As I said, the auditor is one of those collection points. So their office would also, your office would also follow this process. There are some payments that citizens can make that would use the quietus process if they're paid at the courthouse. I'm thinking like a buggy permit or peddler's license. And so then, again, a citizen might have to follow this process as well. But those really aren't as common as those departmental collections. And for the treasurer, there are payments that are made directly to the treasurer's office without going through the receipting or quietus process when those payments are made. Property tax is your biggest example. The treasurer collects and records the property tax payments made, summarizes those payments by taxing district on their cash book until settlement moves those collections by quietus into the county funds for distribution. These collections are only carried on the treasurer's records until settlement, so there is no other record for them than the treasurer's cash book and their obviously their software. So for these payments, after collection and prior to settlement that are being carried on the cash book, the treasurer actually holds the official record, which is why they have to do an after settlement collection report on a supplemental AFR, or sometimes called the CAR, which is an old term for it, to the auditor's office. That's one of the supplemental forms that the auditor gets when they're doing their supplemental AFR. So you should be getting those supplemental reports from the treasurer, from the clerk, from the sheriff. The treasurer also receives the excise taxes from BMV. They're put directly into the county bank accounts or from the state. Special assessments, sewer liens, these are all collected by the treasurer and posted to the cash book until settlement. Innkeeper's tax is also collected by the treasurer by statute, so they get the tax returns and actually collect the innkeeper's tax. They may not carry those on the cash book if they're quietus them in right away, depending on what your county policy is, but the tax returns are filed, the tax reports are filed with the treasurer, and the payments are made directly to the treasurer. Okay, so let's go back, excuse me, to the receipting process. So now we're really focusing again mainly on those departmental collections. Okay. So these are payments that are going to be paid into the county treasury. These are not part of property tax collections. These are, again, mainly your departmental. The fees that are collected for your various departments for county services, license, permits, etc. Okay. And again, it's possible that there are fees assessed by local ordinance that are paid by citizens through this receipting process. It can happen. They're not collected through a specific department, like buggy fees or peddler's license. But most citizens go to the department. They want a marriage license, they're going to the clerk. They want a birth certificate, they're going to health department, things like that. They have a place to make those collections. Step one of the process is to prepare the application to pay. And if we were in person, I'd be putting quote marks around that. This is the name, application to pay is the name of the manual form designed somewhere in the 1940s have the t-shirt to prove it. I will bring it to a conference once and show you. However, I don't think we've heard of too many counties still using this form. So you probably have never heard of it and do not have a copy of it. And we don't care what name you use for the form. Application to pay was the name given to the manual form again back in the 1940s. You can call it application to pay. You can call it a pending quietus. You can have another name for it within your system. We don't care so much about the name. It's the process we're focusing on. But I'm going to call it application to pay because that is what the manual form is called. The application to pay would show the date, what funds would receive the collections, and what amount the payer and the source of the payment are. So for example, an application to pay or a pending quietus might show today's date, that the general fund is going to be posted for X amount of dollars, the perpetuation fund is going to be posted for X amount of dollars, and the total amount of collected of those two sources would total up, and it would say recorder collections. That's just an example. That's what the application pay, the information on the application to pay would show. The departments would have prepared a report of collections that breaks out what they've collected so that the auditor is aware, so you know how to post this money. Okay, because sometimes most fees go to the general fund, but there are times when certain fees are set aside for a perpetuation fund, whether it's recorder's perpetuation, clerk's perpetuation, surveyor's corner perpetuation. There are different funds like that. You need to know how to post those collections. So the department will bring that report of collections to the auditor's office. The auditor starts the quietus process. The auditor reviews the report of collections to make sure the funds and revenue lines are appropriate. The report is mathematically correct and complete before starting the quietus receipting process. It is possible that your county has templates maybe for your clerks because they have lots of lines that they're posting to, or the recorder's office, or even the health department. They already have templates where most of their source of collection, so the revenue lines are already on that, and that's great, saves you time. But it's your job as auditor to review that report of collections and make sure it has everything you need to process. There are counties that have the departments email the report of collections to the auditor's office, so the process can be started electronically instead of somebody having to stand there. And then they'll bring down the collections when the auditor lets them know that the quietus process is started. We're ready to move to the next step. Okay. And here is where some of the misconception came when we were discussing this. Back to the basic stuff. The auditor is not required to count the collections. And again, this is probably the source of the misunderstanding that you can't touch the money. There is nothing to say you can't count the collections or look at the recorder's check to make sure it matches the report of collections. We have no problem with that. What you cannot do is take custody of those collections. Okay? You can't take control of them. They remain under the control of the department until they're taken to the treasurer and transferred custody there. Okay. To try to give you kind of a historical perspective, we did not know that the receipting process that's been around, again, this process was been around 60 years, we did not know that this was not being followed in counties. This is not because our FEs were going out to audit and writing up counties for not following a receipting process. Why we became aware of this issue is because auditors and treasurers were calling us when something went wrong and wanting to know how to rectify the situation. And we realized then that the process and the segregation of duties was not being followed. Okay? So I'm going to give you an example. Let's say a treasurer calls and says, hey, the auditor's office brought out, and these are paraphrased, but they are not that far off what actually happened. So the treasurer calls and says, hey, the auditor's office brought over the collection with the pending quietus from the health department, and the collection's $200 short of what the quietus shows. What do we do now? What we are thinking at the time we're getting this phone call is, why did the auditor have the collection at all? We're assuming the segregation of duties are in place. But what had happened is that in this case, this example, the health department, they came down, brought their collections, their report of collections, and their actual cash collections, and they threw them on a counter or they sat them on a chair somewhere. and a day or two later, or in some cases a week or two later, someone gets around to looking at them and starting that quietus process, and somewhere in that time, there's money missing. Was it missing when that money was thrown on the counter? We don't know. Neither does the auditor, neither does the treasurer. Was somebody take it when it was actually in the at the auditor's office? Nobody knows. All we know is now, at this point in time, we're missing money, okay? And from an audit perspective, what we would do is say that the health department was responsible for the missing funds. They are supposed to keep those in their custody till they transfer them to the county. Throwing them on the auditor's counter or putting them on the auditor's in a basket or on a chair is not a transfer of custody. They're still responsible for that money, okay? And we have been trying to work with departments to make sure they understand that. We get the pushback. Our departments are saying, I don't want to stand around and wait for you to count this. Too bad. You're going to stand around and make sure you get this transfer of custody because you're responsible for this money until it is in the custody of the treasurer, okay? We have also had situations where someone from the county is calling and saying the treasurer is looking over the report of collections and it's not right, okay? Well, the treasurer doesn't look over the report of collections. That's the auditor's job. It starts with the auditor. They handle the report of collections. They're the ones that are going to be posting the funds ledger. They're going to be making that determination. So it has to start with the auditor. Okay. So I'm just trying to say where we're coming back with this, that it's very, very important. Is we know it's not a streamlined process. We know it's not convenient to go to the auditor, go to the treasurer, go back to the auditor. So there are ways to streamline it and still retain the segregation of duties, and we don't have a problem with that, but you cannot erode the segregation of duties, and the departments have to take responsibility for what they've collected until they get that treasurer's receipt. So once the application to pay or the pending quietus process has been prepared, the actual collections must be taken to the treasurer by the department or the payee, not the auditor or the auditor's office staff. Again, we know this is not efficient, but it safeguards those collections and it segregates the duties. The auditor is posting the records. The treasurer is taking custody of those funds for the deposit. And in following this process, it makes sure that they are receipted and deposited properly. So as in our example a little earlier, where does the shortage occur? Did the department make an error when the money was taken from the collections at the department? Did they not pick up everything? Is something still laying on their desk? Sat in the auditor's office for a few days or longer? Did someone there have access to and take it? Or did it fall off? Or is it in a drawer somewhere or stuck under a blotter? To avoid all of this, the report of collections is reviewed by the auditor and immediately the collection is counted, receipted, and accepted by the treasurer for deposit. So if there's anything missing, if they're doing that same thing and we're saying, hey, you're $200 short, the health department, if they're the ones bringing it down, can say, oh my gosh, you're right. I need to go back up and look and see where I made my mistake and look if I left something, a check on my desk or something like that. Because you're right at that point where you're saying, you're transferring that custody and you're saying, the treasurer is saying, I'm accepting this amount only. And that's the only amount that's going to get posted. Okay. When the treasurer hands that receipt to the department, the treasurer's receipt, that is proof that the amount on that receipt has been passed to the county. That department is no longer responsible for this money. Now, some software allows the forms to be created electronically and transferred between the offices through the system. And this is fine as long as there are controls in place that prevent someone in the treasurer's office from initiating the quietus process or someone in the auditor's office to complete it without the input of the treasurer that the collections have been received for deposit. You've got to have both sides, both offices working in this process and putting in, whether it's electronically or not, putting in their initials or signature or whatever that their portion of the process has been completed. It is also okay for the treasurers to set aside or for the auditors to set aside a time for these collections to be received. So like we said earlier, some office, there are some counties, they have the report of collections emailed to the auditors. They have a chance to review it, make sure everything looks good. So when they come down, they're not spending a lot of time in the auditor's office. It's already at the point where they can go to the treasurer's office. They can count the collections, and the treasurer can set aside a specific time saying, hey, between 3 and 4, you can come in and do this. The rest of the day, I'm too busy. That's going to be a county decision, but you can do that. And remember, the important thing is that the auditor is posting the ledger for the appropriate funds that have received these collections, and the treasurer has taken custody of them and has deposited them in the county treasury. So once the treasurer issues a receipt, that needs to be communicated back to the auditor, either electronically or the payer actually walking that receipt back over to the auditor's office and saying, here's my treasurer's receipt. With the receipt from the treasurer, the auditor can complete the quietus process, issue the official quietus to the payer or the department, post the funds appropriately on the funds ledger. The treasurer has already received the application to pay or the pending quietus, which has the same information, what revenue lines, what funds are being posted, so that they already have the information to post their version of the funds ledger. Again, we understand this is not a streamlined process. We get that. You're going from office to office. But these extra steps serve, again, as to address the risk of safeguarding the county assets and providing accurate reports, just like we talked about where there was, $200 missing from the collection. By having these processes in place, we narrow down where that $200, who's responsible for that shortage. Okay. So to summarize, at the end of the receipting process, the auditor has all the information necessary to post the funds ledger, as well as proof that the treasurer has taken custody of these funds. The treasurer can make their deposit and have the information necessary to update their funds ledger from the application to pay or pending quietus. The person paying or the department has documents to show how the collections were posted for their records, so they keep track of their funds, as well as proof that the custody of the collections was transferred to the county treasurer. It's no longer their responsibility. Okay. Whatever system you use needs to provide these same results, and it can vary. It varies from county to county, but the end results need to be the same, and the segregation of duties need to be protected. So the flip side of this is going to be looking at the dispersing process, which is how money leaves the treasury. So, and just as a note before we begin, we noted that offices and departments, even the auditor's office, were collection points for the county receipts. However, all claims must be processed through the accounts payable process with very few exceptions. There are offices that are authorized to have funds outside of the county treasury, such as the Sheriff's Commissary Fund, Clerk's Trust Fund, and disbursements are made from these funds under the direction of the sheriff or the clerk, either the clerk or the court for the clerk's trust. But even for these departments, they should not be paying for operating expenses from these funds. The county sheriff can supplement operating costs from their commissary fund for specific purposes that are outlined in their statute, but they can't use the commissary fund to work around the accounts payable system. Trust funds such as the clerk's trust are held in trust for others. They cannot be used to pay for any operating expenses. All of the claims come through the accounts payable process, the auditor and the treasurer. Okay. There should be no department writing checks for supplies, certainly not for payroll, for anything else outside of the auditor and treasurer's office. That all of that process has to run. That's what those offices are set up for. So on this slide, I've listed the steps of the accounts payable process, and we'll go through them in more detail. Departments do initiate claims to be paid from their operating budgets. However, the auditor must audit all claims before any payments can be made. So that's step one. Once the auditor has audited the claims, they must be approved by the governing board. That is step two. This is usually the Board of Commissioners. However, there are other boards that can approve claims. The Redevelopment Commission approves their claims. Tourism Commission approves their claims. Drainage Board, sometimes park departments, courts, judges can approve court claims, etc. But most of the time, it's going to be your commissioners. In step 3, the auditor prepares the warrant. Remember, this is the order upon the treasurer to pay a set amount to a specified payee or vendor. Okay. A lot of times in a lot of systems, that is setting the check up. But from our perspective, remember, this is just the direction from for the treasurer to pay. Okay. This is very, very important. Step 4 requires that the treasurer determine if there is sufficient money to pay the warrant or series of warrants before those checks are issued, or electronic payments or wire or whatever. In most systems, the actual checks are created from the software. However, those checks require the signature of both the auditor and the treasurer to be valid. The auditor initiates the warrant, so they're saying this is what needs to be paid, and the treasurer is looking at it saying, yes, we can afford to pay that because we have money in the bank to cover that, and both then sign that check. It is very important that checks should not be issued until the treasurer has determined that there are sufficient funds to pay these warrants and approve them for payment. We're going to talk a little bit more about that, but that's a very important step that may have been blurred a little bit in the process. Okay. And then the auditor will post those payments to their funds ledger. The treasurer is going to have all of the check register, so they're going to be able to post the same information to the treasurer's funds ledger. So again, the two ledgers should mirror each other. Again, only by reconciling can you verify that you have processed the information correctly. If there's any errors or variances, those are researched, and then posting errors can be corrected. It's a check and balance on that system. So we're going to look at the disbursement process in a little more detail. Before a warrant is issued, the auditor must have a valid claim or account payable voucher. Okay, have to have something to support each and every check. You either have a vendor claim or a payroll claim. You're not just writing checks without something. You've got to have that supporting documentation. There's a process. So you've got to have the APV or the payroll schedule and voucher. And then also every warrant should have supporting documentation. So on that APV, you're going to show who the payee is, the amount to be paid, the purpose for the disbursement, certification that the goods or services have been received, appropriation to be posted. The payroll claims are completed by your departments. They show each employee the amount to be paid based on the salary or hours worked, and the salary ordinance and the appropriation line. Okay. We do have prescribed forms for claims. The Form 17 is your vendor claim or accounts payable voucher, and Form 99 is your payroll schedule and voucher. Of all of the forms that we have, the Form 17 is probably the most common manual form still used. However, there are electronic versions of this, so I'm not saying that it's always going to be the manual form. It's just the most common one we see. So claims, again, are often initiated or completed by a department or offices outside of the auditor's office. An auditor is going to initiate claims for any expenses of their office. So if they have supplies to purchase, capital outlay, their payroll voucher, of course, they're going to do those. But all of the other offices and departments will be doing the same thing, initiating the claims against their budgets. But all of those claims flow through the auditor's office. This is a screenshot of the Form 17. I couldn't find a county's one. Unfortunately, Ricky had one, but I didn't know. So if you look at her, this same presentation for the clerks and auditor, or clerks and recorders, she's got an actual one. They're exactly the same, except one says town and one says clerk, because it's the same form through all of our units. But this gives you an idea what we're looking for. Again, this is the most common one. This is we audit and pull these claims, and this is probably the one everybody's the most familiar with. But again, it shows you've got your payee listed here, the invoice date, invoice number, description of what's being purchased, an amount. There's a place for the person, for the department, the purchase manager or someone in the department to verify that the goods and services have actually been received. Pay in advance, so you have to have already received those things. And you have to certify that that's been done. So as an auditor, you're checking through all of this and making sure it is completed. It does have to be completed. And I think it cut it off, but on the bottom, there's a place for the auditor then to certify, hey, I've looked this over, and this information is correct and accurate, and I'm certifying it for payment to the governing board. There are, I think in the bigger counties, I don't know, there are some that will actually sign each them, and some do an kind of a what do they call, claims register, where it's a list of them, and there's one place for the auditor to sign and then for the board to sign as well. And that's okay, because as long as you're looking at them. But there is a place to sign each individual one. And here at the back of the form, again, you've got a place to put your appropriation number, how much you're going to charge to that appropriation line. It's possible. Auditors, remember, you can take one claim amount and you can distribute it through several. You can charge part to a general fund, part to a perpetuation fund, or another fund, one of the special revenue funds. So you can split it between that. So you can have more than one. And you can do it all on one claim form, is I guess what I'm trying to say. You can take one invoice and then allocate that charge among several appropriation lines. And then the governing board is going to review these as well and authorize them for payment. So when the claim is received, the auditor's office needs to audit the claim. So you usually have a person in your office that does vendor claims and does the accounts payable claims. And here we're going to talk about some of the things that you're looking for, okay? The first thing you're looking for is the claim properly itemized, verified, and properly supported by invoices supporting documents. If the claim doesn't make sense to your accounts payable clerk, it's not going to make sense to the audit staff when we come into audit. So there's a good place to be stopping and getting clarification if it doesn't make sense, okay? I actually once saw a mileage claim that had the payee or employee's name, a date range of about 6 months on it, and then just a total amount of, $540. There was no itemization of the mileage. There was no mileage form. There was nothing, no reason for the trips, not even know what the trips were. So this was not an adequately itemized claim. It should have been returned at the time it was submitted. It actually made it through to payment, or I wouldn't have been looking at it for audit. But these are the things we're looking at. If it doesn't make sense to you, it's not going to make sense to us. So make sure you're making that claim complete. Everything is on that claim that needs to be on it to determine if it's appropriate. Payroll claims are audited against the salary ordinance or other supporting documents for the salary and wages fixed for that person. So you should be able to look at that, and if they're on a salary, then they're going to get a salary. If they're paid hourly, do the hours noted? Does the hours times their pay rate? And the pay rate has to be on the salary ordinance. Is that mathematically correct? You're going through and looking and making sure all of that is documented. Do they have the time off? If they have paid time off, is that adequately documented on that? Okay. For any itemized claim, the auditor needs to determine that any charges are consistent with contracts for those purchases. So if the county has a contract for the purchase of salt for the winter, say, the charges on the invoice should be in compliance with that contract. If the vendor is saying, hey, you got, I don't even know how much you get. You got a half a ton of salt and times this rate, so this is what you owe. That rate, is that what was agreed to in the contract? You are taking it back to the contract. So you should have copies of all of these contracts in your office so that you can look at them and make sure they're in compliance. In a similar manner, if you are doing a claim against a grant, you need to make sure that you have the information that is in compliance with the grant agreement. Is this something that you're going to be, that is allowable cost for the grant? So you're going to go back to those agreements, grant agreements, contracts, other statutory authority to make those payments. This is appropriate fund for it to be paid from. So you're kind of the gatekeeper for that to make sure that this is that these are appropriate. We give you the uniform chart of accounts, and on the fund descriptions for all of your statutory funds, it lists the statute where those funds are established, and it will list the source and purpose for that fund. So if you have a question whether it is an appropriate use of that fund, you can go to the statute and look at it and say, yes, this is an appropriate use. If it's not, if it isn't clear, you need more clarification, again, this is the time to get it. The accuracy of the claim needs to be determined. If 12 units are purchased at a certain price, then make sure the total on the invoice is 12 times that unit price. If the quantity received is the amount being paid for. If the department notes on the claim that only 5 of the 12 items were delivered, make sure the county is only paying for the 5 items. Payment in advance of the receipt of goods or services is not allowed unless they're specifically authorized by law. So even though they ordered 12, if they only receive 5, they only get payment for 5. Until the other 7 have been received, they are not going to get paid for. So make sure that the accuracy of the claim. That's the same thing we do when we're auditing. So you're going to do it before we audit because you're doing an internal audit of that for the purpose of paying the claim. Was the claim approved by the appropriate official or department head? Has it been approved by the governing board? So the first thing is you want to make sure whatever your purchasing policy is for your county, it's been followed. Did the right person sign this claim for receipt of goods or services so that you know it's been authorized properly? Okay. Your governing board, again, is usually your commissioners. So before you actually pay the claim, you have to get the approval of the governing board. So that is part of the audit process, even though a lot of times in a lot of counties, you've already got the check initiated and you're ready to go forward with it. You cannot have those checks mailed out. You cannot make that payment until the governing board has reviewed that claim, unless there are specific claims that by ordinance you have approval to pay before board approval. Sometimes utility bills that have a short turnaround time. They will allow, you have an ordinance that allows you to go ahead and pay those without the board approval, and then they're just brought to the board at the next regular meeting for them to look at. But unless they're on that list and that ordinance, then they need to be approved first. Okay. Determine that there is sufficient fund balance and sufficient appropriation from which to make the payment. Okay. This is very, very important, and we talked about this in an earlier session on appropriations. In order to make a disbursement, there has to be sufficient money in the fund, and there has to be sufficient appropriation or permission to spend that money. If there is either insufficient appropriation or insufficient fund balance, the claim can't be paid the way it is completed. So you're going to have to go back to the department head or to the office and find another way. Is there another appropriation line that can be used? Is there a transfer of appropriation? We talked about this in budgets, appropriation, encumbrance session. Go back and review that. You need to work with them and find a way to do that. You should not overspend an appropriation or have a negative fund balance, with the exception of reimbursement grants. And we talked about that in the budget appropriation session. But pushing the reimbursement grants aside, do not pay a claim that puts your fund into a negative balance. So you have to find another way to pay that. And also in here, determine that your claim has not already been paid. This is important too. Especially if you're getting a copy of something, a copy of an invoice or a second notice, make sure that you're scanning back or putting through your system to make sure that this amount has not already been paid. There are a lot of times controls in place with your software itself that will catch these kinds of things, but make sure you're using those, and if you're not, that you're actually looking at your vendor history or whatever you need to make sure that you have not already paid this claim, so you're not paying it twice. So each department is responsible for tracking their own budget, and they should be aware of their unspent appropriations and the fund balances, any funds they use. In the best of all possible worlds, they would be. Doesn't always work that way. As an auditor, you can provide appropriation reports for departments, or the departments where have read-only access to the software for the funds ledger. I don't know how your system does it. But again, if there's insufficient fund balance to make the claim should not be posted to that fund and cause it to have a negative fund balance. So you're going to be working with the department, and it shouldn't be a big shock to them. I mean, we realize that sometimes they just send you these claims and expect you to do some sort of miracle and make sure they're all paid. But they are also responsible, again, for their budget and for their funds, and they should not be overspending either their budget or the amount of funds. So then before any money can leave the Treasury, so we got the gatekeeper there, you have the treasurer, they must authorize the disbursement, the actual payment out of the Treasury, out of the bank. This is usually by check, but could be electronic transfer, or could be wire transfer. Often payroll is done as a direct deposit. In many cases, the auditor's office, the payroll person, prepares the transfer from the county's bank account to the employees. So you have a direct deposit in employees' bank accounts. However, the treasurer should first review the total amount needed for payroll, determine that the payroll bank account has sufficient money to pay out this payroll before the transfer to direct deposit is authorized. It's not enough to give the treasurer a copy of the report after the transfer is done. The treasurer has to authorize the payments from the bank. The treasurer should not have to guess how much money is needed in a specific bank account, or if transfers are needed from one bank account to another to make sure that all of the claims are covered. They have to have time to make those transfers, and the money should not be leaving the bank account without the treasurer's specific authorization. The treasurer's office does not need to re-audit the claims for any reason. That's not their job. The auditor's office has already audited those claims, but they only need to determine that there is sufficient money in the bank accounts to make the payment before the payment is made and to authorize those payments. Okay? Someone in the auditor's office should not have the authority to transact business at the bank to the extent that they can authorize payments. If they are preparing documents, as discussed in the payroll example, that's fine, but they should not be able to actually authorize the payment. The treasurer should not be finding transactions withdrawals from their bank account that they were not aware of and they did not authorize. And those are things that have been brought to our attention in the past, where in a particular county, the treasurer calls us and said, hey, there's some money coming out of my account that I didn't authorize. And it turns around that someone in the auditor's office called the bank and authorized those payments, and those payments were for personal expenses. That should never happen. That's why the treasurer controls the custody of the funds, and the auditor controls the reporting of it. They need to keep those separate, and the treasurer needs to be making these determinations before the payments are issued. I understand with a lot of your systems, the checks are created. Both signatures, auditor and treasurer, are affixed electronically. Get that. I'm not saying that a treasurer has to sit down or an auditor has to sit down and sign every individual check. What I'm saying is you need control over your signatures, and the auditor needs to make their signature. Their signature is not affixed to that check until they've audited those claims, and they're saying, yes, these are good for payment. And then those checks should not be issued until the treasurer countersigns those checks saying, yes, there is sufficient money in the bank to cover these checks. They're good to go. So again, the auditor is responsible for maintaining the official records of the county funds, and as such would post the disbursements to the funds ledger. The auditor would also post any corrections, any transfer funds, voids for any checks that were made in error or need to be changed. But any information that the auditor does from their office should also be conveyed to the treasurer at the time of the transaction. So if you're voiding checks, if you're making transfers, if you're posting corrections, if you're voiding quietus, you need to let the treasurer know everything that you've done so that they can keep that same posting, make those same posting corrections to the funds ledger on their side. For the treasurer, the only thing they have absolutely is they know what was quietused in because they have all of the receipt, the quietuses, and they know what was sent out because they have all of the checks. But if there's other activity that's going on, then again, transfers, voids, things like that, you need to make sure that you have that line of communication open. And then again, once a month, at least. A lot of counties do it more often, and we certainly applaud that, but once a month at least, those records need to be reconciled to determine if there are the same or if any variances need to be researched, any posting errors corrected. The reconciliation, again, acts as a check and balance of the system to ensure that the accuracy of the funds ledger. The auditor's funds ledger is the official record, but the treasurer's funds ledger acts as a check and balance against that and makes sure that that official record is accurate and complete. And as we talked before, the two offices must work together to properly receive and disperse funds from the county. The segregation of duties between the offices should not be eroded. We've noted sometimes in the past, one officer may be stronger or more experienced than the other, and they've kind of stepped in to the other office, or maybe they held the other office in the past, and so they kind of know how it works, and they've kind of stepped in to keep things going. And they've blurred those lines, blurred those segregation of duties. We realize that happens, and maybe at the time that was the best decision to make. You're going to have a hard time convince Ricky or I of that, but maybe as a county you made that decision. That should not set precedent that this is the way it is done in our county, and that's the way it's going to be for the rest of your life. As newly elected officials, you are in a unique position to look at the duties in your office, how the two offices to work together, and determine if there has been any erosion of those segregation of duties and work to reinstate those. You're there now. You can take responsibility for what your office needs to do and shore it up and have two strong officials then working together to make sure that the offices are working the way they're supposed to. And I think we're ready for questions.
Okay, I am going to unlock you guys. There we go. So that you can, if you'd like to ask a question, you can just unmute your microphone and ask a question. Or if you feel more comfortable, you can also enter it into the chat box. But we will open up the floor to you now. Any questions? Clear?
I have to tell you, the first time we talked to the Auditors Association and the Treasurers Association on this, we were not prepared. We were not prepared for the pushback that we got. And we just thought this was the way it was being done. And, why were we changing things? So it's been a rough couple of years on this. I think we've talked about it almost every year for the last 2 or 3 years. I still say I lost 2 partners over it, but maybe not. Just saying, So we understand this is very difficult. Again, it's not a streamlined process. It's kind of convoluted to get it done. So we realize you're getting pushback from your departments, from each other's offices and stuff, but got to be a way to make it work.
Any questions at all?
They're all stunned into silence.
Kind of sad that it's kind of coming to an end, too.
Know.
Actually, these are our last presentations for this week for these.
Yeah. It's been
hopefully
fun.
You guys, and hopefully you guys found these valuable.
We would really have loved to have done this in person. I think the in-person interaction is really great. I think we get much better in the questions and answers than we've had through the virtual. But, we're making the best we can with the situation that we have. But we hope you do feel comfortable coming to us. If you don't want to talk right now, that you do feel comfortable coming to us and talking to us either by phone or email, or we can do a video chat if you want as things come up.
Absolutely. I do want to remind you to be on the lookout for the survey next week. I plan on it to go out probably Thursday is my thought on this. Get us through all of our sessions. We have, one more session for the clerks, actually. Not put on by us, but so as soon as that one is over, I want to send it out to everybody to get your opinion for that. So just like I said, be on the lookout for that. It'll probably come into I haven't done it yet, so I think it's going to be a link to a Microsoft form if you're familiar at all with that. So it'll just be a link that you go to and answer questions, and then, like I said, it'll be anonymous. Responses will be sent to us. But it's very, very helpful.
And we want constructive criticism. Tell us what works and what doesn't work. If you just you can keep that to yourself, but you hate us, you can keep that to yourself. But if there really was something that would have made it easier or better or something, we want to improve. So we really need your feedback on that. It's the first time we've done it this way, so we need to know.
And we're getting ideas on moving forward to the next time we have to do this. So we do have some on our, ideas ourselves to make it a little bit better. So it's always nice to hear from our audience as well, so that we get an idea of what you're seeing from that side. Well, I guess if nobody has any questions, we can let you guys go for today. I hope that you're staying warm. I'm hoping there's not a whole lot of ice where you are. I've heard south got some ice. You know, I have quite a bit of snow here. I am like central, but north central Indiana. So it was really, you know, we're glad that we got you all together at least this way, that you're able to get some training. We hope that it's been valuable. We hope that you've been in the office for, you know, what did I say, 40, yesterday was 41 days, so 42 days. Today. We hope that you kind of have your feet wet a little bit, but we do want to emphasize, please call us, email us. Do not be afraid to do that or ask any kinds of questions. Lori and I are here. We would, you know, love to give you guidance on the front end of situations. So, you know, or in the back end, it doesn't matter. Just call us if you need us, okay? We're open to all of that. Well, I guess we will let you guys go. Have a wonderful afternoon, and hopefully we'll get to see you in May, right?
Okay. Yeah.
So, anyway, thank you guys.
Bye.